you want to be a successful trader, you must It's not Zins, guys. These are caffeine pouches. Okay, this is day trading recap number fucking 4. The losing streak is actually over today. Actually, because this video is a little bit delayed, I lost today, which will be next video. This video, I decided to beat the losing streak. So we're doing good today. I did low-key forget why I entered into this trade. The CTE is kicking in. Short-term equilibrity. Anyways, we took a short in class today where basically my confluences were marked out liquidity spots and used equilibrium. Equilibrium right here. And I also used previous highs of liquidity to enter into this trade. So let's explain. Number 1, the equilibrium. I went over this last video. Equilibrium is basically where price doesn't really know what it wants to do and is deciding what it wants to do. And oftentimes in this equilibrium zone, which you could see right here, price likes to re-enter and then go whichever way it wants to. Equilibrium likes to go above or directly at the 50% mark. So the 50% mark is from its top to its bottom zone. You can imagine a trade. Imagine this. This is the only thing I saw in between, in here, and I guess all of this too. But besides the point, all of this is what I saw, and based off of that, I decided to short all the way over here. I mean, I saw all this bottom shit too, but we'll talk about that later. If we zoom in, let's go on the actually we're good. We don't even need to zoom in. So that's the equilibrium part. It's honestly really easy. You got the 50% mark. You see that price decided to go into it, respect it, didn't go over that equilibrium portion, and decided to go in the direction that I wanted it to. So that's always really cool. Equilibrium is a zone where you can oftentimes re-enter into a high to get a long chase like this to the downside or to the upside. We'll go over what equilibrium also looks like. Funny enough, there's equilibrium right here. We have the high. We have a high. We'll go like this. Right here. And I don't even know for sure, but I'm just betting, which I was right. So you have the equilibrium right here. You can see equilibrium. It's this zone, including this wick right here, the high and the low, or the low and the high. And as we can see, price likes to go back into this 50% zone and then carry its ass on to whatever lows it wants to reach. So that's another example. I didn't use this as a trade. I probably should have, because that was a very clear equilibrium zone. Just to show you again what equilibrium is, this right here is also equilibrium, but just because it's equilibrium doesn't actually mean that every single time there will be a retracement. So we can see here that there's a lot of equilibrium. It's this choppy movement, yet there isn't a retracement into the zone yet. So that's also equilibrium, but it's a different, I mean, it's still equilibrium, but it just hadn't retraced yet. Where else can we see equilibrium in the works? We can see equilibrium in the works right here. got the low, you got the high. And I'm just going to make a bet right here that we see it like this. This is some shit equilibrium. Usually with equilibrium, okay, all this stuff has to work together. Just because you see equilibrium on the map doesn't mean that just because you see equilibrium that the action of the price will go in the direction you want it to. There has to be multiple confluences. So with mine, there was a liquidity sweep as well on top of the equilibrium. And a break of structure too. We'll go over that. So hopefully you guys get the point of what equilibrium looks like. I said it earlier, but I'll say it again. Equilibrium is basically where price is trying to figure out where it wants to go. And oftentimes, price will then, after this equilibrium, go down, re-enter into that zone again, and then go even further down into someplace. Or up. Equilibrium could go up also. It doesn't always have to go down. But you guys understand the point. Now, the next thing I think that we should go over is liquidity and break of structure. Okay. So what do we have right here? Let's go over the liquidity section first. We have a high right here. We have another high right here. This high right here was not beaten out by this high right here. So this is kind of not a liquidity sweep. This is a very good liquidity sweep right here. So I remember that because this trade was a while ago, so we're going through this together. I remember that I looked through the entire map and I saw that there was a liquidity sweep right here. And as we can see, price went down, went up more to this area, and then basically what this means, why this liquidity sweep actually matters, is it kind of shows that price is trying to get to a certain position, usually above previous highs or just below previous highs, to show off another confluence, which in this case was a break of structure. So we could see that there is a high right here, and there is also a high right here. Okay, so I just deleted something in the video because I'm still trying to remember why I took this trade, and I'm super tired. I'm doing this every day. Besides the point, we have a break of structure where we have a high which is lower than the previous high, signifying a downwards trend. Now, when I took the trade, I was looking at these previous highs and seeing if it would go above this high right here. And if it did, that would either be a liquidity sweep or a liquidity run. The difference between the two is that if it's a liquidity sweep, price will move like this, downwards, right after it goes above these highs. Or what could happen is price decides to move even further, which is a liquidity run. And based on that idea, I saw that there wasn't a liquidity sweep right here. There just wasn't. Price was actually right here, right under this area. And because of this, and because of this high and this lower high, I could kind of infer that the general trend was going to go downwards, mostly because of the equilibrium zone. Thank you. Mostly because of the equilibrium zone. Now we're going to talk about where I put my highs and where I put my lows. Why did I put my highs right here? Because the previous, or the tallest high should always be your kind of stop loss, or your entry. The only problem with having your entry right here, let's say I decided to enter in right here. You can see that price didn't reach into this zone right here, so my order wouldn't have been fulfilled. So the other thing you can do, which is what I did, is I entered in after you saw the break of structure. If we go in the 1 minute, we saw a break of structure here as well, where you have a high, a higher high, and then a lower high. This is actually a break of structure right here, right here, right here. You have your first high, which is the lightest high, your second high, which is the medium high, or like the medium color high, your third high, which is the darkest, and this is good. This is representative like the time. And you can see that this zone is slower than this one, meaning we have a break in structure. So when I saw this, I decided to enter in right here. I didn't even set an order. I just enter a sell right away, or a short right away, and decided to have my stop loss right above these kind of zones right here, or at the zone. Because, I mean, if price went above this, well, two things would either happen: the liquidity run or the liquidity sweep. And probably what would happen would be the liquidity run, because it took out both of these highs, because it would have taken out both of these highs. So like if it went above this, I would have lost more money. And by putting it here, I can both accept the fact that I was wrong without losing too much money, and also enter into a spot where might be in risk of not even getting fulfilled. Hopefully this all makes sense when I'm editing this. I am so tired. But yeah, my take profits were a little interesting. I just put $1,000, so I risked the 500 right here to make 1,000. My idea was this liquidity spot zone right here. My idea was that this zone would get re-entered and that price would bounce back up or go slightly back up into a downward zone. So yeah, I made money, guys. From that point, I think I was only down like 500 some bucks on the weekly. Yeah. The next trade that I took as well, I'm not going to go over it exactly. It was off of this right here. My last video that I edited was about over trading. And I decided to take 3 trades right after each other because the first one I lost, which wasn't even the trade I was actually supposed to take. The second one I won because I just went with the flow of everything. And the third one I lost because I wanted to make more money and I set my stop loss too low. So don't fucking overtrade, bro. It's actually annoying. And this was just like, literally, I couldn't even explain how beautifully this trade would have been. This was actually like the sexiest trade I've ever took in my life. I like want to go over it right now, but I'm not. Long story short, I'll just tell you the dilemma with this trade. We had a fire drill in class today, and I set my order here on a buy order or a long order and a short order right here, and price had to go down first. Price had to go down first, and then decided to go up. So I was, goodbye guys. You understood hopefully something. I don't know if I understood anything today. Consistency is key. Use this tool every fucking time, your grid lines, because this shit's fucking wonderful. It's just so cute. It's just so cute. So cute. Yeah, guys. Comment down below if you guys learned anything new today. I'm going to keep posting some videos. I'll probably try posting one. Today's Friday. I'm going to try posting one on Sunday. Either finish editing this one or we'll see what happens. So yeah, bye.